All right, let's jump straight into this explainer. Today, we're breaking down the extreme volatility that just slammed into the cryptocurrency market on July 25, 2026. Picture the market right now like a high-stakes anime battle. Vibrant comic colors, explosive vector animations, the whole shebang. We've got opposing forces of massive institutional capital, geopolitical tension, and leveraged trading all colliding in real time. We're going to map out exactly who is winning, who's getting absolutely crushed, and what the ultimate boss fight at the end of the month looks like. $225.2 million. Boom. That is the massive net outflow that just slapped US spot Bitcoin ETFs in a single trading session. To really put that into perspective, before this hit, Bitcoin ETFs had been riding this incredible 7-day streak, literally pulling in nearly $1 billion in fresh institutional capital. So, you gotta ask yourself, what just shattered Bitcoin's billion-dollar streak? How does a run of pure momentum just hit a brick wall overnight? Well, let's unpack the exact catalysts that turned all that market euphoria into a sudden defensive retreat. Section 1. The battle for 65K. Bitcoin's momentum meets a wall. Okay, looking at our main character here, Bitcoin is absolutely in the fight of its life. We're trading right around $63,942, which is down just over 1.5% in the last 24 hours. Earlier in the week, BTC actually surged and tested that $67,000 mark, but man, it faced an immediate and aggressive rejection. Failing to hold that crucial $65,000 to $65,500 range is a big deal. It basically exposes the market to two paths. Either we're entering a really painful stabilizing phase to absorb these blows, or we're on the brink of a much broader downward reversal. Section 2. Macro pressures strike back. The geopolitical heavyweights. Because look, Bitcoin isn't fighting in a vacuum, right? Let's shift our focus to the external villains of the week. These macroeconomic heavyweights are triggering a massive risk-off shift across all global equities, and they're dragging crypto right down with them. We've got renewed US-Iran tensions dominating the news, marked by a reported 13th consecutive night of US strikes. On top of that, oil prices just topped $100 a barrel. This geopolitical friction has totally spooked traditional investors, causing a broader sell-off in tech stocks. Analysts are actually calling this the biggest macro test for Bitcoin in 2026. It's the ultimate test of whether it can stand its ground when the rest of the financial world is running for cover. And the market's reaction to this barrage of threats? Well, the Crypto Fear and Greed Index is sitting firmly at 27. 27. That is straight up fear territory, folks. It proves the psychology of the market right now isn't about greedy accumulation at all. It is entirely dominated by caution, defense, and anxiety. Section 3. The Great Liquidations Squeeze. 17,791 accounts wiped out. Now, this brilliantly illustrates what happens when dropping prices meet a fearful market. The traders who borrowed money to bet on prices going up, the leveraged longs, find themselves in a highly dangerous spot. Out of the $70.81 million in total liquidations across crypto in the last 24 hours, a staggering $64.01 million were long positions. Shorts barely made up a sliver of the pie at under $6.8 million. The bulls were caught completely off guard, over-leveraged, and just totally exposed when the momentum abruptly shifted. And to really wrap your head around the scale of this carnage, check out this specific critical hit. Honestly, it's like watching a devastating combo in a fighting game. A massive whale account got liquidated on a $38.67 million leveraged Bitcoin long position. And the craziest part, they had only opened the position 18 hours prior. The price of Bitcoin dipped a mere 1%, but because they were so highly leveraged, it instantly triggered a $368,000 realized loss and just wiped that massive position right off the board. And actually, scratch that, it gets even messier. On top of the liquidations, we've got compounding exchange drama. BitMEX is currently facing a class action lawsuit alleging they manipulated liquidations and effectively stole 623 Bitcoin in collateral on a shutdown day. It just adds a whole other layer of unease and distrust to a market environment that's already incredibly fragile. Section 4. Ethereum defies the trend, the rival's resilience. You know, every anime protagonist has that rival who just stands there looking completely unbothered while the hero is taking a beating. In this market clash, that rival is Ethereum. While Bitcoin ETFs bled out that $225.2 million, US-listed spot Ether ETFs extended their inflow streak to 5 consecutive days, adding $26.3 million. This tells us Ethereum has some serious independent institutional momentum. It's a slight bullish divergence that proves not all capital is fleeing crypto. Some of it's just rotating over to the resilient rival. Meanwhile, the rest of the altcoin battlefield is just pure chaos. We're seeing explosive moves in small caps, with DXE surging 132% and YUL up 51%. But quick reality check. Analysts are warning these are just liquidity bounces following massive 80% crashes earlier in the week, not fresh fundamental demand. Contrast that with WorldCoin, WLD, which plunged 10% down to roughly 34 cents. And it took that dive despite just announcing a massive $52.5 million funding round. It really shows that in a fearful market, even objectively good news can't save a token weighed down by heavy whale concentration and supply concerns. Zooming out for a second, though, we absolutely cannot ignore the structural damage in decentralized finance. The DeFi sector's total value locked is down a painful 39% year-to-date. And this isn't just because of token price drops. It's being driven by a record wave of security breaches and hacks in the first half of 2026 that have seriously damaged overall market confidence. Section 5. The looming boss fight, the July Fed decision. So we've got the geopolitical threats, the brutal liquidations, the fractured altcoins. But guys, all of this is just the warm-up stage. The real final boss is this timeline right here. On July 28th, the Federal Open Market Committee meeting begins. The next day, July 29th at 2 p.m. Eastern, the interest rate decision drops. And then at 2:30 p.m., we get the Fed chair's press conference. Right now, the market overwhelmingly expects the Fed to just hold interest rates steady at 3.50% to 3.75%. Now, since a rate hold is pretty much entirely priced in, the actual number matters a lot less than the words used. The true battle is going to be interpreting the Fed chair's tone on inflation and the future policy path. If they hold but sound dovish, highlighting cooling inflation, that is going to be incredibly bullish for crypto. If they hold but sound hawkish, focusing on sticky prices and high demand, that's bearish. And if they pull a surprise rate hike out of nowhere, there is no way around it. That would be a market shock capable of triggering another vicious wave of liquidations. So the crucial point to take away here is this quote: Bitcoin does not need an immediate rate cut to remain resilient. It needs to avoid a material tightening in expected policy. Basically, the crypto market is just pleading with the Fed, saying, hey, please don't push us any further into fear. Just give the market some room to breathe. Let those ETF inflows resume and let the geopolitics stabilize. We've seen the ETF streak broken, whales flattened by leverage, and those macro storm clouds gathering. The stage is perfectly set. So, will the upcoming Federal Reserve decision be the catalyst that triggers a triumphant recovery for Bitcoin? Or is the crypto market completely vulnerable to another massive liquidity sweep? That is the multi-trillion-dollar question. Thanks so much for joining this explainer. Keep your eyes glued to those charts, and I'll catch you in the next one.